welcome back to our second lesson. So this lesson is going to be the introduction to bias. So some of you may have seen in the chat I said some weeks there may be a few more lessons, and then most weeks there'll probably be one lesson a week, right? Bias is quite a complex topic. On the surface it looks simple, but there's a lot of aspects to it. So for this topic, I'm gonna intend to make lots of smaller videos, so in future when you guys come back to it, you can refer back to single videos a lot easier. You're going to see some of the topics we cover, and essentially I'll be making a video on each topic and going into more detail. But let's get into it. So I'm assuming most of you know what bias is, right? But for those of you that don't, bias means knowing where price is headed. And in simple terms, usually we look at bias on a daily and a weekly scale, right? If my weekly bias is bullish, I'm claiming that the next weekly candle will close as a green candle. So it's going to close as a bullish candle, right? Or you might have different colors. And what the draw on liquidity means is what is price drawing to. This is a very, I won't say complex topic, but there's quite a few things to it, and we're going to get into more detail. But price draws to certain things. Some of you listening, you might already know what I'm on about. You know, when we talk about the algorithm, we talk about liquidity, we talk about imbalances, but knowing how to use your draws on liquidity to frame trades and all of that stuff, we're going to get into that. The bigger picture and the higher time frame. So doing top-down analysis, premium versus discount, and internal to external liquidity. So top-down analysis means starting from your higher time frame and coming down lower. Premium and discount, I have a video on my YouTube. I want everyone to go and watch that. It's on my YouTube channel, 10% Trading, just to grasp basics of premium and discount. And after that, we'll get into a bit more detail and how to use it. I just need everyone to know the basics rather than me individually having to catch up everyone. And internal to external liquidity, we've already had a lot of questions about this, and we are going to get into more detail. But cool, let's jump on the charts for this one. Okay, so this is the Bitcoin chart, right? And this is the daily chart. If you guys recall from the last lesson, what did I say to you? If we're making new highs, right? Let's say from here, we're breaking highs and we're respecting lows. What are we doing? We're in an uptrend, correct? So on the daily time frame, right? You could say, okay, we're heading up, we're in an uptrend now, blah, blah. If we come down, or come up, sorry, to our monthly, this doesn't look like an uptrend to me. This looks like we had a market structure shift once we broke this, right? Even on our weekly, what does this look like? Looks like we had a market structure shift once we broke this low, right? And since then we've been heading bearish. There's not even been any like nice retracements, you could say, right? And what's the point of all of this? The first point I made you guys on that last slide was top-down analysis. Top-down analysis means starting on your higher time frame. Most people will already know this, you know, like starting on your monthly and so forth and coming down to your lower time frames. But it's a very, very basic principle that we need to stick by, right? Because let's say, for example, again, some of you should go and watch this, my OTE lesson. When price retraces, we expect price to retrace into a premium, right? A premium is above the 0.5. So on the weekly, let's say we're expecting a retracement up here, right? There's an order block here. So now we even have a target. There's imbalance here. There's imbalance here. We're filling it. Cool. We have to understand that on the weekly, this is what's happening. Because if you come down to the daily, you might confuse this as a solid uptrend. In reality, this is an uptrend, right? I'm not trying to confuse you guys. This is an uptrend and price is heading up here. But once price gets up here, do we think it's going to break this high? I mean, you never know, it could, but realistically, if price retraces to the OTE and is clearly very bearish, what am I expecting? I'm expecting price to come up here, you know, tap into that weekly order block we saw around here somewhere, and then start to trade lower, right? We're just being logical, but to frame what I just said, we had to start on a higher time frame and come down to a lower. So in all our analysis, we're going to go into a lot more detail about this, especially Bitcoin doesn't offer a lot of data in terms of candles, right? For example, on the DXY, I've been using the 6-month and the 3-month chart. So on other pairs, there can be a lot more to it, and we will get into more detail. Okay, so the main topic that I want to talk about today, contraction and expansion. With the last topic, the bigger picture and the higher time frame. That was a little bit of an overview, and we'll be going into more detail and with the other topics coming up. But with contraction and expansion, right, this is quite a simple concept. But once it clicks, you'll realize you can use it so well to frame your trades, knowing when to trade and when not to trade, right? Every candle, when it opens in the market, any time frame, it contracts and expands. How do we know this? Almost all candles have a wick, right? A wick is left because price was there and it moved away. So usually, right, if we have, let's say, as I said here, weekly and daily candles is where we want to pay attention specifically. Usually with your weekly candle, what you will see, right, if it is a bullish week, the candle will initially be bearish and then it will turn green, usually around midweek or Tuesday onwards. And what these two lines mean, anticipating contraction and participating in expansion, right? What we need to consider is contraction. I'm not going to say it's a fake move because we can still trade it, but contraction always has a reason. Price trades into something. What we want to do is participate in expansion. We want to wait for the contraction to finish and get in line with the expansion. Why? If your bias is correct, right, you want to get in on the strong move. Let's say our real move, right? You don't want to be trading the small move that's trading into, it could be trading into an imbalance or anything. And the reason I've mentioned the weekly and daily candles in specific, of course, we have to look at monthly time frames and, potentially higher the 3 month, 6 month, yearly even. But when we're actually trading as normal traders, considering most people in the chat are probably, intraday or scalpers, I don't think there's any swing traders. But even if you are, the most relevant will be your weekly and your daily bias. Your weekly bias, knowing where the next coming weekly candle will go, and your daily bias, knowing where the next day will go. And for both of these candles, again, we will get into a lot more detail and we're going to kind of break it down and see how to actually anticipate contraction, see where it could go, and then how to know that the expansion has begun, right, using logic. But let's get on the charts. Okay, so this is the DXY chart. This is a US dollar index, so the USD. Let's take this weekly candle over here, right? This weekly candle, of course, as you can see, is closed now, and the new one will open today evening. Was a bearish candle, but you can see there was a large wick up first, right? So this is a good example, right? Let's box it off so it's easier to see. Got 1, 2, 3. So the last 5 days, of course, makes your week. We want to consider the candles inside this box. Can move that here. So we're considering from this candle. So 1, 2, 3, 4, 5. Where did the contraction occur? The contraction was here, right? The price had this, let's say, fake move, or at least a move up. And what did this move up do? It had a reason behind it. It took this liquidity. There's a trend line building. It wiped the liquidity of this last high that was created. It wiped the liquidity of the previous daily candle. So this was a Wednesday. And then price moved lower. Price expanded downwards, right? So what I'm trying to show you guys here, with our weekly candles, and again, we will get into more detail what days can do what. There's specific days that can make the high of the week, specific days that can make the low of the week. But, it's all a probability game. And once again, we will get into detail. And this concept of contraction expansion, it happens on all time frames, right? So of course this is our weekly, yep. And then let's say we take this daily candle. So this daily candle is the last 6 4-hour candles. 1, 2, 3, 4, 5, 6. So we consider all the candles in this box, right? Again, it's the same concept. Price first contracted downwards, and which way did it expand? Where was the bulk of the move in this space of time? Upwards, right? So we contracted downwards. very strong move up, and then we traded back in. This kind of breakdown is very similar to how the weekly candle also trades, right? And we'll get into that eventually. Okay, so the last thing that I want to finish off on is news. News is very, very important in aiding knowing when to trade and when not to trade. And I just want to show you guys. So this is a screenshot from Forexfactory. That's the website I use to determine all the news. There's a specific setting that I want everyone to use, right? Let me show you guys. If you go to forexfactory.com, something like this should open up, right? And once you're on here, if you come here where it shows you the green filter, I want you to click on this green filter and then select the red and the orange folders and then press apply filter. And what should happen, right? You can see all what we call the high impact news for the upcoming week. You know, it's got all the dates and the times. This time is in London time, UK time. And of course, there's a bunch of different things. Different types of news will have a different type of effect on the market. Red folders mean it's usually more volatile. And of course, orange folders are less volatile. There's some data on the side here. What we expect from the news. And then of course, what happened at the last time that this same news came around, right? And this is some technical economic knowledge. You can go research this by yourself. I will teach you guys some things, not everything. Mainly stuff like CPI, FOMC, NFP, things that really move the market. So this week coming, we have NFP, which is this right down here. So we have a bunch of USD news, especially when there's USD news. That is what I'm looking out for. I trade Euro USD, I trade GBP USD. A lot of you guys trade crypto. So the USD news is very, very relevant as it moves on markets and it's usually very volatile. The last few NFPs have been a bit less volatile than usual, but it's still very volatile for any new intermediate or beginner traders. And with news as a topic, right? I'm not just going to teach you guys what the news is and what it does, but rather we're going to get into how you can use news to form a bias and understand where price may be going and potentially get in line with that. But that's one thing that will take a lot longer and require experience compared to some of the other topics we were talking about today. So that's it for today's lesson. That was quite short. I wanted to keep it brief on purpose, and I just gave you guys an overview of each topic. Definitely we're going to be getting into a lot more detail for each topic rather than making one massive video that's 40-50 minutes long. I can then make a 10-minute video on each thing and you guys can refer back to it easier. If there's any questions in the meantime, let me know. And later this week, I'm definitely going to be getting a lesson or two out again on some of the topics that were mentioned today.